A beautiful morning to you. This is Ron Janish with andrewscourse.com. And over, let's see, the time. The time is 6:53. That means the market's been open in New York, almost a half hour. And today is the 6th of December, to give you some kind of orientation. This here is an ES chart you're looking at. And it's the December ES chart, which I guess is set to expire pretty soon. And as near as I can tell, this is set to go a bit higher in the coming days. And so as prices come down, I would be looking for an opportunity to enter. That if you're inclined to want to buy this market and take the ride to the upside for a while, then I would suggest keeping your eyes open for a bit of a pullback. You can see it's down 1.25 today, and might be an interesting opportunity. This is my list of symbols that I'm actively watching, and if you're in the Precision Trader group, which is a free discussion group through Yahoo, which, by the way, if you go to andrewscourse.com or babsontrading.com, it'll say subscribe to Precision Trader. It's all free. You click on that, and it automatically sends out an email, and you just put subscribe in the in the body or in the subject line, and you'll be fine. And Yahoo may ask some information or something, and if you want to, you give it. If not, you don't. And what happens is that you get to receive some emails, about 2 or 3 a week, maybe more. No garbage emails, no advertising for Viagra or any of that nonsense. And you'll get ones that tell you when there's a new video, ones that'll tell you what kind of trade we're looking at. For example, the other day, I put one out regarding the oil patch when prices were up here, suggesting that take a look at the market here because we're looking at the short side. And so put that out, and then it's up to you to analyze the market and make your decision on what to do, if anything. And as you can obviously see here, it says P&L open 0, P&L day 0, which means I don't have a position on in here. But since I'm looking at the oil patch, this is gasoline, and you'll notice P&L open is 571 and P&L day is 877.80. And let's examine what these things here mean. Open means, hey, if at this very microsecond I closed out the position, I might have this much here in it, minus commissions. And where it says P&L open, where the day is just, well, since I'm short one, where it says -1 here, that's really how much it's gone down today in my favor. Okay, if this is a negative number, or if it's red, then it's gone the other way. So that's a risk we have in trading at any time. So let's take a look at some of the other ones. These are the ones that I'm particularly looking at. Let's take a look at the dollar. Dollar. This one here, I really think we have a good chance of continuing to the upside. And it's just a matter of when. Maybe there's some announcement or something coming this week that'll help things along. So we'll, have +1, as you can see here. For the day, it's up a bit and more than the open position. So what that means is yesterday, after we got in on the long side, it went down a little bit more, and that happens. So here we are with next thing, gold. Gold. This is one. Now, one of the things you'll notice is every once in a while I have a limit thing up here, and this is really what a fake order, totally fake. The objective of putting this order in here, even though if the market jumps up all of a sudden I will get filled, is in order to have this chart pop up automatically on this list of positions. That's all it is, and this way I don't have to deal with certain other features in this software. So this kind of reminds me that I've done my analysis, and if things go the way I like, then there's a chance that I might wind up going short in the next day or so to work on the ride to the downside. Okay. Let's see, let's move on to hogs. Now this one here, I made a mistake this morning. I went short, and which I want to do later on, but apparently I pressed the wrong button or something and wound up getting in, and okay, that works. And so I got out immediately. The way you deal with mistakes is, for the most part, just get rid of them, even if it costs you a few bucks. So we're looking at the hogs going up again and then continuing to the downside. So really want to wait and see, really like to see prices go up a bit more before I consider a short position in here. Okay. Here's your heating oil. Remember, the oil patch is one that I'm looking at for the downside. So let's remove this. Let's just go here, high, low, high. And we're looking at probably, prices coming down to this area here, if not a whole lot lower. But the initial target area would be down in this area here, which, like Andrew said, prices make the median line 80% of the time. Okay. Let's see, what's the next one? Yes, these guys. This is a cool one. This is LE, that's cattle. Cattle are kind of cool. We were selling, let's see, 11475, which was up here. Now, if you're really astute, you'll know that in the last video, we were short from 11107. Okay, and what happened then was prices went up a little bit higher. That was about here somewhere. And prices went up a little bit higher, and we put on additional positions. And then after prices dropped quite a bit, we took off two of those positions. And now I'm sitting here, and well, let's wait and see. Maybe it'll take a day or two or more for prices to come back up before they go down even more. So I still have one short position on because, hey, the market is the market, and it just may go straight down from here, which isn't likely, but it's possible. So let's see, what else is there in terms of lines? Well, if you liked trend lines, you've got a nice little trend line here underneath supporting it. And so for prices to come up for a few more bars would not be unusual. RB, that's gasoline, see? We wound up going short up here somewhere, 155.20. Let's take a look. That would be here. And then prices spiked up and went down. And this is where we are now. So looking at considerably lower prices in this. Now, if you're a course member, if you've taken Andrew's course, you really should be seeing what I'm looking at. And how do you know that? Well, give you a hint. The gas, the heating oil, and the crude oil have something in common that my good old buddy Tom would look at, who was at our seminar and gave a special presentation. Okay, so now you know what to look for. And that'll give you some idea as to what's going on. Another one we're looking at that we don't have a position in are the bonds. And if you remember, when prices were over here, we put out a video saying, hey, yeah, we're short, and then they went up a little more, and down she went, and wound up taking some profits, and then it's been up we go for several days, and we're seriously considering getting back in on the short side. And so we have this fake sell order up here, just as a kind of a placeholder thing for this software. And we'll wait and see what happens, right? And last but not least, the soybean meal. Got two positions on, put up one up here, put one short up here, and then prices went back up and put another one on. And I think this one has a real good chance of continuing to the downside. Okay? And this is your median line. This would be your median line target, which would be quite a ways. Okay, so I hope that gives you an idea of what you'd be looking at with Andrew's insights. And If you have questions, submit them over to me. If you get a chance and you're an expanded course member, please come to our seminar, which will be at the end of December. Okay, and it will be in probably Newport Beach or Dana Point. Dana Point has this beautiful place called the Monarch Inn. We can usually utilize some of their facilities since we have a small group for free. And the Monarch Inn is ridiculously priced. So it's just wonderful, just a wonderful place. And anyway, we'll be seeing you there. And you have any questions, go to andrewscourse.com or send it to me, support@andrewscourse.com. This is Ron Janish signing off. Till next time.